Hey everyone, BC Richfield here, coming to you live from London. We are going to take a look at Bitcoin's price action. We're coming towards the end of the week. It's coming up to about 5:30 here in the UK, which makes it 4:30 UTC. And we just want to take a look at how we're looking to go into the end of the week here. So as we can see here, I've got a weekly chart open, and we're going to do this with a naked chart, as I like to do, and we're going to do a top-down analysis. So if we zoom in here, we're looking at the key levels that we want to take into account in terms of what's capping the market to the upside and also to the downside. So for me, this was a key level. So because this is our weekly level, I like doing this in teal, make that a little bit larger as well. Now, as we go down, now we're looking for what's capping the downside. I mean, we've got this clear low down here, this one, but I quite like this one here. Right, now you could draw it under here as well, which gives an interesting contrast here because we can see if we were using that, we can see how price kind of got back above it here, and now it's actually starting to hold. So let's leave that one on there for now. And then this was another key level that we've had our eye on here. Now, why these levels? Okay, price has run into here, we found resistance, gone beyond but failed to close. And then when we have this deviation here, we can see how aggressively price sells off, smashes through this level down here, and then it takes the liquidity under these lows. All right, so the same with the other levels. When we see it here, we've got resistance, price closes above, retests it and makes a move higher. Then when price drops down below, we close, we retest, and we sell off again. And we can also see the resistance that it's posed here. So on a higher time frame, we've got two really clear ranges there that we can play, all right? And whenever we're looking to trade a range, the principle's always the same. If we see a deviation like we got here, yeah, then we're looking for price to come back within the range and trade to the far side of the range, all right? If price goes up, closes above, and then builds a bullish structure, yeah, taking out the highs, then we would expect higher prices. So let's drop down to a daily and see where we are. So as we can see here, we can see all these long upside wicks, right? That was driving price. You can just see the selling pressure up here, all right? And then down here, we can see the long downside wicks showing us that there's buyers there. So when we ran these lows, right, and price came back up, and I'm going to just get rid of this line for a second to make it clean. Definitely a valid line, but I like this one here because we can see when we're dipping into this, we can see the buying pressure, right? Driving price back above this level. Now, something else we want to do whenever we're trading a range, or certainly something that I like to do, is I like to draw out with a Fibonacci so that we get our 0.5 level. And on this one, I've got the 0.25 and the 0.75 as well. So we can break these down in a little bit more detail. Now, what we can see is when price ran the lows here, we had this big impulse move to the upside, right? We took out all of this buy side liquidity, all the stops up here, we deviated, we closed back in, and then we sold off to the far side of the range. Now, the reason, and the 50 level on here is the really key one that we're looking at, right? Because if price is going to stop somewhere before it reaches the far side of the range is very, very often the equilibrium, right? The 0.5. So we can see here when price broke down, retested, went down, found the 0.5 level, broke below, retested that as confirmation, and then sold lower. When we get these inefficient moves, like we've got here, and see this fast impulse move up, the candles don't cross, it leaves this inefficiency, right? Or fair value gap. Then more often than not, you see those get filled, right? So that was always a key target, especially when we deviated up here. Price just didn't have the momentum to continue higher. It took out all the stops here, trapped breakout traders, and then it sold off, all right? So where are we at the moment? Well, currently we're rejecting at this 0.25 level. If I zoom in a little bit here and we get a closer idea of what's going on. Now, we can see here how structured this move is, right? But again, fast moves up like this often get retraced, yeah, because they're not sustainable. when we see these kind of patterns, almost like a staircase, then it tends to be healthier price action, right? Because it's making a structure. Now we can see this here. Price is really, really grinding up until again we got to the 0.5 level. We deviated, closed below, retested, sold off. First of all to the 0.25, then we closed below here, retested it here, and then we flushed out these lows. All right. Now we can see there's clearly a lot of buy pressure below here, right? We got this beautiful bullish hammer candle that's taken us back up, but price has found difficulty getting back to the 0.5 level. Now, we want to see obviously how the daily closes. The weekend tends to obviously be a little bit kind of hit and miss, really. The volume is down significantly. So I'll be looking to Monday for the next significant move. However, we can see by the size of this wick here, if we close similar to what we are at the moment, then we can see there's a lot of sell pressure there, right? So before we go and look at this on some slightly lower time frames, maybe look at some potential setups, or certainly look at the levels that we want to be conscious of, I want to put on the B Pro. And what always gives me confidence here is if we get these B Pro divergences, right? We can see the bullish divergence here led us up to here. We got this one, which was the start of this move. The bearish divergence here allowed us to get into short positions that we traded down to here. But now we've had this bullish divergence here. Now, as this pushed us back up, as we said with this hammer candle, and we've closed today, we got that upside momentum continued, but we've now pulled right back, right? So I'm going to flick that off for a moment. Now let's look at things on the 4-hour chart. So when we run a key level, like we've done here, and we also need to remember that we've taken out liquidity down here. We haven't quite taken that one out yet, but that was definitely a target. But we have come down for these, right? We can see here when this was run, taken out the stops, caused this bullish reversal. Price comes up, retest this level, and that gives us the momentum to push higher. Bear with me a second while we make these red. So we've got a couple of key points of interest here. So if this fails to push any higher, then this here becomes liquidity to the downside, or sell side liquidity, and our buy side liquidity would be up here. Now, what made me feel that we were going to push a little bit higher here are these highs, right? So we've got relative equal highs here. So if we just mark that in across there. Okay, now what we can see is there's liquidity above here. We can see here as well. When price came up, took out these highs, ran into this, came back down, and then broke down. So for me, I was thinking that when price had this nice bullish reaction, we had this big flush down, we took out all these stops, we had this big reversal, it's got everybody bullish. Maybe this is a correction, coming back a little bit before it goes higher, because what I'd really wanted to see was something like this. Was price coming up, taking out these highs, all right, and then when we close below this low, that sweeps the highs, this would give us our entry. All right. We obviously haven't got that so far. I think it would be pretty bearish, actually, if we broke down at this stage here. I mean, sure, there can be a bit of liquidity over here. They're not quite equal highs, but there's nothing really significant to this, in my opinion, right? If we look at any of these other moves and we take the low to the high, when we short here, again, first target becomes a 0.5. We lose that, come back, almost retest it to the T before we then sell off down to the range lows. Now, we want nice, clean highs and lows so that we can be confident that there's liquidity above there. So for me, it feels like there's a lot of liquidity up here to run into. And if price can make that push up there, then we're asking a serious question. We're saying to ourselves, can we hold this 50 level? If we then manage to reclaim this, right? Price pushed into this, right? But we managed to get above it, hold a little bit, start building bullish price action, right? And structure. Then we could have some long opportunities here up into the range higher, all right? Which is, again, obviously our key weekly level. Now, do I think price is going to do that? I'm not sure. It's very, very difficult, especially in the current market conditions or in any market conditions. In truth, we don't know. What we're using strategies and techniques to try and increase the chances and the likelihood that we can predict one way or the other. And all we're doing is we're stacking these odds in our favor by using techniques like reading price action. So what would we want to see here? Well, at the moment, for me, this is just very much a no trade zone, right? Because we're in between these two pools of liquidity, right? We've got the downside liquidity here, or sell side, and we've got the buy side above here. If price was to run back up to this, go above it. If we then lost that, and again, we'd be looking for the low that sweeps the high, for price to close below that, and then we can enter on a retest. You can do that with using the breaker line or the market structure and a retest of that. Or if there's a fair value gap around here and price pushes into that, then I think we come down here. And again, we look at this as a range, but I'd be targeting this first, but then ultimately the liquidity that's sat under here. All right. So maybe there first and then there as a secondary target. So the other thing, again, that we would do is we would take our Fibonacci. And then we would make sure that we're aware of this 50 line, right? That would be our first target. If we broke down from here, we'd want to see what was happening at the 0.25 because we've got that on both fibs. We see how they both align there. So we'd look for a reaction here. But I think we would go below that, definitely down into any lows that are set in here. And then price could drop even further. So until we get down to here or here, then I'm not convinced that there's a trade on, not for this. However, we do need to remember that we've taken out these highs. We are in a bullish structure now on the 4 hour. So we would need to see further confirmation of a breakdown in terms of structure. Yeah, so something like this, come back, set that lower high, and then break that low. And then I think we're pretty certain that we're going to come down at least to this area or possibly even down here. So I hope that's been helpful, guys. Now, I'm going to be back on Monday. I'll be live, obviously popping this one out for the legendary Bird today, who is over in Vegas doing some amazing things. So do keep an eye on that and do check out the Twitter and keep up to date with what's going on. I'm going to be back with my live show on Monday and then again on Wednesday. So do stop by. And if you've got any questions or would like any chart requests in the meantime, please come and find me over at the Nest.